Hello Southeast Asia and welcome to day 3 of Southeast Asia DeFi Week. Right now it's exactly 3 p.m. and we are broadcasting live again from Asia Blockchain Center in the heart of KL. Southeast Asia DeFi Week is brought to you as made possible thanks to all our friends and event partners across Southeast Asia, from Philippines, from Vietnam, from Indonesia, Thailand, and Singapore. You'll get to know all of them throughout the entire week. All right. Today, right now, we are in day number 3. Okay, and we have 7 days of exciting content. Okay, for you to get to know. But before we get into that, why are we doing this event? Okay, what must you know about DeFi right now? Before we go into the content, you must know that DeFi is something that is very new. And this is probably the reason why this event is so, we are very happy to go and bring you this event, is because DeFi is something that is emerging really, really quickly. A lot of the protocols, a lot of the projects are starting to get explosive traction only in the last 6 months. However, because of the explosive growth, and it's kind of like a double-edged sword, you would receive both ends of it. Okay, there will be people, okay, that are, it's good as well as it's not so good, because it tends to attract a lot of bad actors as well. So this space is full of high risk and uncertainties, and we hope that this entire week you will learn how to differentiate, okay, between the two. So with that, we'd like to put out a disclaimer that none of the content here should be seen as financial or investment advice. This is an emerging space. All the content that we bring to you for this entire week is for education purpose only, so that you know about DeFi, even despite, okay, all the very, very fast developments that's happening in the space. The goals, okay, of this week is to help more people in Southeast Asia to learn about DeFi by providing a safe environment and easy to learn. Okay, help you to differentiate between what is real, what is fake, what is legit, what is full of non-legit. Okay, so that you can very quickly identify what is not, and then put your focus and attention on the real opportunities that are out there, and help you to find A, remote work opportunities, or B, generate an alternative source of income, like a side hustle, etc., 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 in this industry, especially at this very, very unique time that we're going through. Coronavirus, unemployment numbers are really, really high. However, the one place that is actually growing and hungry for talent is the crypto/blockchain industry. So by having more of you who know the technology for what it actually is, and are able to innovate, carry out a more mature conversation beyond just the speculative, 10x, 20x conversations, then you would become a very attractive person in this space. There are a lot of reputable projects out there who would then want to work with you, want you to be their user, want you to be their developer, want you to be their fan, want you to be their champion. That is the purpose, okay, of this thing. So for those who are just tuning in for the first time in these 3 days, what is DeFi? DeFi is short for decentralized finance. And the simplest definition that I can put together of what it actually is, it's an emerging set of computer programs, tools, protocols of a financial nature that you can use without needing intermediaries. And over the 7 days in Southeast Asia DeFi Week, you get to learn a plethora of different projects and use cases. So we are right now on day 3. We have covered, in the first 2 days, you have learned about money market protocols like Compound, Aave. You have learned Instadat, okay, a new user interface which simplifies, okay, the functions that you would need to use, okay, if you want to interact, okay, with these DeFi protocols. And you have also learned about a decentralized exchange, one very popular one with a very good user interface called Uniswap. Now we have covered a lot, okay, in the last 7 days. Sorry, last 2 days. And I have been receiving a lot of text messages yesterday after the InstaDApp session. You are asking me, Jason, can you teach us how to do the leverage? Can you help us, how do we open up a maker vault? How do we short die? I want to know, okay, how Treelock does what he does, etc., etc. Now, whilst this is really, really good, I'm very happy that you're excited to learn. Just want to point out that those kind of things are kind of like level 3, okay, of that kind of like scope, right? It's very, very important to first get your basics covered. Like, for example, what are cryptocurrencies, not your keys, not your coins, how do you handle wallets, how do you handle wallet security, etc., etc. You need to get all those things sorted out first before you jump into something, okay, like that. And a lot of you have also been texting me about YAM token, which is catching a lot of headlines since early this morning. I would consider that as level 4. Remember, DeFi, there's so many layers to go get a deep understanding about. So do take your time, okay, in this space. I really recommend that the journey of learning about DeFi starts by understanding each and every function and use case where the actual real value actually comes from. So to recap, okay, we talked about lending protocols like Compound and Aave. And we also learned about decentralized exchanges like Uniswap. These two are very different. These are the first few examples that we have covered in the first 2 days that by now you would learn that it extends what cryptocurrencies can do. In the past, cryptocurrencies are great because it allows us to transact globally, openly, borderlessly, without permission, without censorship resistance. But you can only receive and you can only spend. Right now, DeFi protocols are having this extreme amount of product market fit and traction because it extends the superpowers that is available in cryptocurrencies. It allows us to lend and borrow, and it allows us to participate, in a way that we can actually earn something in between. So an example for lending protocols, one thing that is very important to know that when you provide liquidity to a lending protocol, you are earning interest. And when you are providing liquidity to a decentralized exchange, you're earning trading fees. All right. Also, something that is very important to take away from the first 2 days of that we have covered so far is how DeFi works. DeFi works very differently from the centralized finance that we are familiar with. The first thing that is very different is that DeFi operates in an environment of over-collateralized assets in order to always be solvent. That means people need to put in, you need money in order to borrow money. Now, this might be very new to a lot of Asians, but it's actually not. It's kind of like putting your car as collateral or your house as collateral in order to get some financing. It also exists in the traditional finance space. This is one of the biggest things that I learned also from day one from Robert Leshner is that this is essential to create an environment where you can lend money to people without actually knowing who they are, what is their financial background, what is their status, what is their race, what is their creed. It removes that all completely. People need to put in an over-collateralized amount of asset in order to borrow from the DeFi space. This ensures that the DeFi environment is always solvent. And then the second thing, okay, that is really cool about DeFi is that all the transactions that happen in the DeFi space are secured by an immutable, openly verifiable ledger. And even the computer codes, okay, like what you see in Compound, what you see in Uniswap, what you see in Aave, are all openly verifiable. And there is this, and the reason, okay, why this is so new and so interesting is because we are starting to see, okay, an environment where we can do more without trusting, okay, whether the other party would be able to, cheat in this system. We don't trust, we verify. Everything is verifiable in this new ecosystem. One thing that you also learn, okay, is the term money Legos. So over the last, just the first 2 days, already there's so many money Legos that you have learned. You have learned, in the first DeFi week, okay, we touched about stablecoins introduced by Maker, cryptocurrencies are the first two money Legos in the DeFi space. Then on Monday, you learn about interest rate markets, that's what Compound and Aave provide. You learn about constant product liquidity pools, okay, which is what Uniswap, okay, provides. You learn about interest-bearing coins, is what a feature that Aave created. You learn about flash loans, okay, the ability to borrow money, okay, to do something, to get a certain transaction done without using your own funds if you can repay back that loan plus whatever cost or interest within 15 seconds within the same transaction. You learned about credit delegation, okay, from Aave as well. And over the next few days, okay, you're going to learn even more money Legos. Like today, we're going to cover, over the next few days, you're going to learn about synthetic assets. You're going to learn about virtual representations of other cryptocurrencies from different chains. Like how do we bring Bitcoin into Ethereum so that Bitcoin lovers can enjoy the services available on DeFi. So in the first DeFi week, you learn about Wrap Bitcoin. In the second DeFi week, right now, we are happy to bring you synthetics, okay, SBTC, TBTC, Keep, which is tonight. DEX and you're going to learn, okay, the different kind of money Legos that are being built, like DEX aggregators, EU aggregators. So one of the biggest takeaways they can get, what this all means, is that, and why is it that DeFi is gaining so much traction, is because we are seeing a kind of composability that we have never seen before. In the centralized finance space, it is very difficult for the banks to work together to innovate in this space. But right now, in this permissionless environment, whenever this protocol creates a money Lego, it inspires this other person to basically permissionlessly say that, okay, this is useful, this is interesting, and he has created it, and he has proven it, and he has market traction, and his liquidity. I'm going to take that, and I'm going to see whether it can work with what I want to build, and whether can I solve other problems, and whether can I make things more productive, or whether can I yield hack. And that is what the DeFi space, why the DeFi space is gaining so much momentum and traction right now. A lot of people, they say, okay, they ask the question like ICO, okay, days back in 2017, what is the difference between what we're seeing right now? The difference, one of the biggest difference is that right now we are seeing these protocols are all existing and tools, okay, that is gaining a lot of users, as opposed to the ICO days, okay, where you, how do I say, when you ship a project, you don't ship a project, you are basically giving a promise and the product doesn't even exist yet. That's one of the major differences between then and now. This does not disclaim that there will be bad actors, okay, that will leverage on the buzz, okay, to basically create some fraudulent schemes to scam people. But this is one of the major differences between what we're seeing back then and now. Now, so it's important, okay? I know this is a lot to take in, right? However, again, take your time, take baby steps, learn, okay, what each and every single protocol does, okay, why do they exist, what value propositions do they bring to the table, okay, and yeah, I hope that you enjoy, okay, the next remaining 5 days that we have together. So we have a lot more to cover. Today we'll be covering OMC. I need to be upfront with you. I just got informed that the REN project can't join us today. So today's session is going to be cut short to just 1 hour, okay, 3 to 4 p.m. We were hoping, okay, that Long Wang can actually, the CTO, okay, of REN protocol can actually join us. However, you know, things happen. And I was really looking for, okay, to understand just beyond what I know, like what does, which is one way to bring Bitcoin, Ethereum using their virtual. Hoping to learn, okay, a little bit more about their dark pools and also the function, okay, of the REN token. However, things happen, okay, and we will probably, what we'll try to do, okay, is we'll try to invite them back, okay, at a future date in time. All right, so I really sincerely apologize, okay, for this unexpected thing that has happened. But, okay, we are having, okay, a session with another project which is bringing Bitcoin to Ethereum, and that is the Keep project. And we have Carolyn from the Keep team joining us at 9 p.m. tonight. So there will be another session, okay, at 9 p.m. tonight. Due to the time difference, they are located in the US. That's why we're having this session for you. All right, so do join us then. But for now, okay, we are happy, okay, to talk about OMC. OMC Group, okay, is is a chain of its own. It's a project created by a Malaysian blockchain developer team. Recently, in last Friday, launched a new CryptoKitties kind of non-fungible token collectible digital pet game. So, like, there are 6 different elements, okay, you can incubate them, built on their own OMC chain 2.0. And we have with us today Sylvester Lee, who is the Chief Technology Officer of OMC together. I know him as the guy who brought Durian onto the blockchain. Thank you very much for being with us today, Sylvester.
All right, thanks.
So this is how I got to know you by, okay? The first time I met you was, I think, 1 or 2 years ago, and you were working on this project, okay, to bring Durian, okay, to the blockchain. Can you share with the audience what brought you to blockchain, and how is this project right now going?
Well, to be honest, the Durian projects never realized it.
What happened?
Yeah.
It was a proof of concept only.
Yeah, it was a proof of concept, but we discovered that this kind of applications is really difficult to proceed. The reason behind is, the purpose of doing these brand tracings. What is the value behind? We don't find the value behind the data. Basically, like, the reason why we want to do the tracing, because Durian, we can trace, we know the origins of durians, but ultimately, like, what does it actually helps to the consumer? Musang King is Musang King, right?
I thought that the use case, okay, for putting Durian on the blockchain was because people last year, China,
Yeah.
okay, I remember back then, okay, our then Prime Minister Dr. Mahathir, he said, okay, that we got new quota from China, okay,
Right.
for Malaysians to export Musang King,
Right.
but they were worried that people would cheat and they will give different kinds of durian. So isn't that a strong enough use case to record?
That use case is actually strong enough, but then the design we have to tweak a little bit. We can't actually trace every individual durians, but we can trace by batches, right? Like we trace the invoices, we trace the purchase orders, we trace the logistic. That will be much more helpful and valuable compared to trace an individual durian. And it actually involves a lot of cost. Like you need manpower to do the tagging, and then you need manpower to do the verifications. Contributing the data like where this durian has been shipped from one place to another place, and you need a lot of parties to collaborate together to contribute the data. And it's very hassles. To get somebody else who is not working for you, they do not get the benefit out of it, by doing those things. Then, that's why it's difficult to push forward these kind of applications.
Right. Okay. So what you're basically saying is that that there are just too many stakeholders involved.
Right.
Hard for everyone, to get immediate benefit. I think that's one of the challenges, in the blockchain space.
Yeah.
A lot of people, they expect, that when you introduce them a proposal that it instantly works and it instantly makes everybody happy, but it doesn't work like that, does it?
Yeah.
It's all about iteration, testing, failing, test again, experiment,
Yeah.
etc.
So end up we actually focus more on like invoice tracing, purchase order tracing, supply chains tracing. That kind of application is much more worthy to do it, and the involved stakeholders are more likely to want to participate, especially like banks. They maybe want to try how to leverage on blockchain technology to fasten their invoice financing, loan processing process, to quickly approve the loan or things like that. Yeah.
Okay. Now I understand that you guys are going to build something on for the DeFi space.
Yeah.
All right.
Yeah.
I'm excited to learn about that. But before we go into that, let's talk a little bit about OM chain. Is it OMC chain or OM chain?
We call it OM chain. In fact, the chain starts with C, so we straight away,
OM chain.
OMC, OM chain. Yeah.
OM chain.
That'll be much
All
more
right,
easier
okay.
to pronounce, Yeah.
Right. So OM chain.
Yeah.
So can you tell us a little bit, about first and foremost, why is it that you guys decided to create your own chain? Because in the last 3 years, anyone in the space knows that it's very difficult to create your own chain.
Right.
There's security issues. There's what made OMC group create.
Okay. In fact, let me be honest with you guys. We are not actually entirely building or creating our own chain. In fact, we actually forked from Quorum. And then why we want to do that is because of we discovered that like Ethereum network, occasionally, especially during this DeFi hype, the gas fee is soaring very high. It's very expensive to make one transactions. And we also discovered that public blockchain has one issue with the performance because the data synchronization, the block synchronization, it takes time to synchronize the data to all the nodes worldwide. So that's why it actually has some performance bottleneck in this area. And then because we want to promote blockchain adoptions and we want to design blockchain application for the company, for businesses or enterprises. And most of them feedback to me that they are more likely to concern about the performance, and secondly is the privacy of the data. So that's why we chose Quorum, because Quorum can support private channels, and it is a consortium chain, which means that the nodes can be shared, can be set up by a certain authorized parties or companies. So I think this is the best technology that we can tweak and change, modify based on this kind of requirements. Yeah. So yeah.
All right. Now I saw your marketing, right? It says that Malaysia's leading blockchain developer. So my question is, what have you guys built so far? Okay, can you share with us, okay, what you're building as well?
Yeah, sure. We have our first product launch in our own chain. Is the OmniPads. It's a ERC721 non-fungible token games. All right, it's something like similar to CryptoKitty. So this is also our first. How to say the first projects we want to test and run our chain to make sure it is stable and it is good to use for futures. I mean, yeah. So we also deploy some ERC20 tokens in the chains to do testing. Right?
So I noticed that it is on-chain 2.0 right now.
Yes.
So, that's quick, isn't it? Okay, we haven't even seen on-chain 1.0 and now it's on-chain 2.0 already.
Yeah.
Can you share with us, okay, what was on-chain 1.0 and now where you guys are?
Okay, so on-chain 1.0 is the blockchain protocol that we built by ourselves. We have written the source code from scratch. So it was in unspent transactions output, the UTXO models. And at that time, why we created this kind of blockchain protocol is because of we know that Bitcoin has Bitcoin mining has a energy efficiencies problem. It's very high power consuming, and we want to solve that kind of issue. And then that's why we have created a new mining mechanism which leverage on storage to do the mining, which means you contribute the storage, you store the nonces hashes into the storage, and you can reuse it, and then you can use these nonces for the mining. Basically, is to do the block verifications. So this technology is considered very old. It doesn't support smart contracts, and when we want to promote blockchain to the company or businesses, and then we discover that it can't perform much. It doesn't smart contract, and when we want to build a token for the company, we have to fork again and then do a lot of code changes. So that's why we want to move on to a new platform, and we know that there are a lot of benefits using Ethereum. So we want to we don't want to be like Ethereum again. It's a public chain and the performance is so slow. So based on the requirement, the business demand, then we chose Quorum, and then we upgrade Quorum and create our own kind of a blockchain technology. Yeah, to cater for that scenario.
Okay. So you guys are going to build a DeFi product, I understand.
Yeah.
Can you share with us what are you guys building?
Maybe you want to. I can share my slides.
Let's do that
would be
right
easier.
now. There we go.
All right. Let me go through the slide with you guys. Maybe a little bit of background. What is OMC Groups and what we do? OMC Group is actually founded by. We have a mother company called AIO Synergy Holding Berhad, right? Which actually founded in year 2014. AIO Synergy is mainly software development company. And then we would like to, because we have seen the potential of blockchain, and that's why last year we formed OMC Group. And OMC Group is a subsidiary of AIO Synergy Berhad that actually focus only on blockchain application development work. So we actually separate the software and the blockchain applications into two different company or two different entity. Right. So our vision is actually wants to become a leading solution provider for blockchain, and we want to redefine blockchain in a public's perspective, because a lot of people think that blockchain can only be used to create cryptocurrency, and people create tokens to do sell tokens, and that's it, and has no other use cases. So we want to readjust people's view on about blockchain. So we are going to focus more on doing research and development in blockchain applications. Like we want to create games. So like the OmniPads is our first projects to actually want to prove that blockchain not necessarily must be just token, and then it can be used to do a lot of things like tracing or games is one of it. And we may be very specific into a different industry. We can create a different use cases, different applications, yeah, for our customers. Okay. So this is where our office. If you guys are from Malaysia, you can drop by, and Asia Blockchain Center is also located in this area, in this building. So yeah, it's located in Federal Highway. So and this is how our office looks like. Just a quick showcase. So OmniPass is one of our products, our first products, and you guys can actually go to Google Play Store or Apple App Store to download our OMC wallet, and then from there you can actually play around with these OmniPads, right? So for those who don't know me, and this is a little bit of my background, I'm the CTO of OMC Group, and I have another company called Verifizer. Okay, I'm a founder of Verifizer, the company which had done the durian tracing. End up we changed our strategy. I'm also the Alibaba Cloud MVP, blockchain advisor for a STO project in US called HomeBlock. I'm also an executive vice chairman of Hong Kong International Blockchain and Financial Associations. I also sometimes provide trainings and teaching, so I'm also a software mentor of European Innovation Academy. Yeah, that's my background. Okay, so I would like to share with you guys like what is on-chain and what we had gone through in the past 1 year and why now become a version 2 and what it actually solve. So in the past 1 year, we actually deployed our on-chain 1.0, which was in UTXO model. It was a public chain, and then we actually tweaked the consensus algorithm. So this consensus algorithm called authorized proof of capacity, we actually leverage on the storage or capacity. We keep those hashes and nonces in the capacity, and then these nonces can be reused to actually to sort of like a game, you know, mining. Basically, it's similar like how we do the mining, you know, finding the correct nonce to consider as a verified block. So we actually did the same concept, similar games, you know, but just that the way how we do the verifications is a bit different, right? And then the block size we increased to like 5 megabyte. The block time is 1 minute. So the transactions per second throughput is about like 350. And then this technology was meant to be a P2P payment solution, similar like Bitcoin, but with much more energy efficient, which means you do not need to purchase a N miner, you know, which consume a lot of power to actually calculate the hashes, you know.
So one question, okay, from the audience is that if OM's chain is a fork, okay, of a Quorum, if that is the case, can you share what is the custom RPC for MetaMask connection? Is it?
Yeah, we can share that, but we will share that later, maybe after the live.
Okay.
Yeah, sure. Okay. Where was okay?
On-chain 2.0.
On-chain 2.0, right?
Oh, on-chain 2.0.
So on-chain 2.0 is a account model-based blockchain, somewhat similarly like Ethereum, and it is a consortium network. So because of considering the data privacy of the companies and also the performance, so we set up in the consortium network, and then we base on Quorum rough consensus algorithm, and then on top of it, because we want to maintain the design of how we verify the block, that's why we attach additional logics to do the authorized proof of capacity consensus algorithm still in place, you know, because we do not want to totally strip off these features, because those people who actually purchase our mining machine in the past, I want them to continue using them to generate tokens, you know, so we want to keep that way. And so in account model base, there's no more block size. It's actually based on like gas limit. So we have increased the gas limit more than Ethereum. So now we have 4 GUI. And then the block time is 50 milliseconds, so the transaction throughput is about 3,000 TPS. So it's very quite similar to Quorum. So why OMChain 2.0 is because we want to focus more on DApps development platform. We want to create a platform for people who want to build DApps, and this platform will be providing a very cheap gas fee and fast performance purposes. It's specially designed for these business use cases, basically, right? So when we have gone through, 1 year experience in cryptocurrency or blockchain projects, and we actually learn a lot of things, and we actually face quite some challenges, that we can commonly find in most of the DeFi projects, or maybe ICO, IEO, or STO projects. So most of the projects, some projects I have seen them fail. I think I would say majority of the project fail. So we want to learn from others. So and we discover that why they have failed is because some of the project do not have the core value, and we want to tweak ourselves. We want to make sure that our project also actually can bring value to the people or businesses. And how the value can be bring up is because our project must be able to solve business problems, solve actual pain points, and then only the popularity will be increased automatically. I believe that, and why some DeFi projects so popular right now is because people think that they can solve their problems. All right.
I want to talk a little bit about this right now. So my question is that you guys are planning to build a DeFi product, similar to basically allow people to put in deposit assets, okay, and then borrow assets, just like a money market protocol as well.
Yeah.
But how are you going to do it differently from, say, Compound and Aave?
Then I would like to share my next slide here. Okay, so what we're trying to do is that, okay, you have a Bitcoin, all right, and you deposit into our platform, all right, and then we will treat like, okay, it's more like you want to lend money from us, or maybe not really from us, it's actually from the public because it's DeFi, right? So the public, whoever has extra money, okay, they can actually deposit the extra money into a pool, okay, a fund pool, all right? And then the fund pool, and then the borrower, of course, they have Bitcoins, but they do not want to sell their Bitcoin now because they know that the Bitcoin has potentially increasing their value because of their demands here and there. So, and then, but he still need money. Then how? So he can actually take his Bitcoin as a collateral. Okay, they can borrow the money out from the pool. Okay, and then for instance, assume now Bitcoin may be worth 10,000. I know it's more than 10,000 right now, but he only needs about 8,000 okay, US dollar probably. Then he can actually deposit his one Bitcoin to this platform, and then he can cash out and he can withdraw like 8,000 loan as a loan. Okay. And now our system have sort of like a how to say the program or maybe a contract saying that if the Bitcoin the price of course we have to reference from an exchange, maybe Binance or maybe some other exchanges, and then if the Bitcoin price drop until like 8,005, okay, then we have to force sell the
liquidate.
Bitcoin. Liquidate. We have to liquidate, and then once we liquidated the Bitcoin, we have to return the money to the fund pool. Right. Okay, so that the lender money can be protected.
So my question is, when a loan, okay, using this DeFi, are you creating your own stablecoin?
No, not really. We try to leverage on as a stablecoin like USDT as much as possible. So what you can see in this chart, this diagram, why you can see there's a OC or OUSD, it's not for our own stablecoin or own Bitcoin in our network. It's like more like a ledger. We want to keep track like how much we added the Bitcoin into our platform. and then we have a record saying that, okay, you actually did the deposit here. So at least I have a data you guys can verify. You can our block explorer, and you can see that somebody has actually initiated a lending request, and it's the Bitcoin that he had actually deposited into our platform as a collateral.
We have a question from the audience, okay? Yeezy, okay, from Malaysia asks, what is the, if you can just basically sum it up, like maybe 1 to 3 points, like what is the USP, what's the unique selling point of this new chain, OMC? What would that be?
The unique selling point of OMC is, I mentioned, the gas fee was very low. In fact, the gas fee minimum is like just three grain. Definitely, it's much cheaper compared to Ethereum, and because it's a consortium chain, we can the performance is very fast. 3,000 TPS. Is very fast, and we want to promote more enterprises to use our chain. It's not a normal, people can play around with it, because we want to control that as well. Because it support private channels, so some sensitive data transmit between the nodes going through private channels. We have a separate channels to show that as well. Because in my past experience, like maybe for instance the durian use cases, I have a lot of invoices wanted to share with the bank, but these invoices data I do not want to disclose to the public, and because I don't want my competitor get a hold on like where's my.
So but isn't on the topic of gas fees, the reason why Ethereum's gas fees are really high right now, because they are really in demand to use Ethereum, right? Like, if people really want to use, you also have the same problem. Happen that if the demand for using using the DeFi applications on chain, like the demand really high. What's different?
Okay, the difference is that this is a consortium chain. It doesn't have minor competitions there, so it's always fixed at that rate. So this is our unique selling point here.
Right.
So this doesn't matter. High is the
it's
demand.
More stable.
It's more stable. Yeah.
Okay.
Correct.
All right. What's that? Sorry. Carry on with your presentation.
Yeah. So basically, this is our planning stage right now, and in fact, we are still learning what is DeFi. And I'm not sure this model is it good enough. Our main intention is to protect the interest of the lender. Okay, we do not want people lose their money, and we are trying to design a model where they can protect the interest of the lender. So, and when we design that way, it will become like a hybrid model. So that's why in my title saying that partially decentralized finance. I do not want to claim that I'm a decentralized finance, because this involves a centralized platform to do the checking, validating, and do the maybe there's some KYC process should be going on. We also want to know who is the borrower and who are the lenders. But of course DeFi doesn't do that. But I want to protect the interest of the lender. I have seen a lot of people lose money because of simply just invest here and there, and then I find that there is nothing to back their projects. At least if I create this kind of platform, I'm not sure public. What do you guys think? Do you think this is trustworthy or how? I'm not sure. So this presentation is more like a marketing survey, getting feedback from the audience. Like, what do you think?
So we welcome you guys and girls to give in feedback to Sylvester. What would you like to see? This is a company from Southeast Asia developing a DeFi product. What would you like to see from this product? I think that the very interesting thing that you mentioned earlier that we were speaking about during lunchtime is there is one unhealthy side to what's happening in DeFi right now. There's always a conflict between the people who are building the protocol and the conflict between people who are investing, okay, in the tokens. All right. I was listening to a podcast. This is a very good podcast by one of the most leading DeFi content creators out there, called the Bankless podcast. And they were interviewing the founder of the Wi-Fi token and the YEarn protocol, and Andre Cronje. Andre Cronje. I think that's pronounced correctly. And one of the things I found really, really interesting that he said was that when asked about his opinion of Wi-Fi and how is he going on, he feels very, very stressed right now because he felt that the gained too much traction, grew too fast, too big, too fast, and that he's overwhelmed. Okay, with number one, responding to social media expectations, to to governance calls. Okay, basically a lot of people. Once you start to introduce a price component into the project, okay, everything changes. Okay, it's people tend to evaluate your project based on green candle, red candle.
Right.
You know, okay, green candle, you're the best project in the world. You're amazing, fantastic team.
Yes.
Red candle, you're a scam.
Yes.
You know, which is really, really tough. Okay,
Right. Yes.
so how would you go about different? You were telling me this during lunchtime. How would you do it differently?
Well, we have seen this kind of situation most of the time. You know, like what Jason mentioned. When the green candles, you know, people's earning money, they will think that, wow, your project is very good. There are a lot of potentials. When it's
You're the best person in the space, you know.
Right. So, you know, there are a lot of good projects, of course, and but you know, investors mostly are very impatient. They want quick return. They want to earn money, and this is very normal. You know, everyone wants to earn money because of of course, because of the greed as well. I have to be honest and saying this. And
yeah, it's hard to control that.
Yeah, it's very hard to control that. And you know, good projects, it takes time to build, and they need real revenue generating model to actually help them to sustain. But in the starting point, during the beginning stage of the projects, of course, it can be the growth will be very stable. Okay, until there may be a group of people more likely like to, you know, speculate, like to play around with the they like to speculate. Basically, they want to create hype, and then they, you know, they will do market making, you know, trying to, you know.
Right. So if you're going to introduce your DeFi product, right? Okay, how will you do it differently so that, you know, this will not repeat?
I can't guarantee that it will not repeat, but I want my first intention, my main objective is to want to create a model that can actually protect the interests of the lender. All right. So if I can do that, I think it doesn't matter like how those others can, you know, do their thing. Yeah.
Right. Okay. It sounds like you based on your roadmap, based on your trajectory, you would work well with the regulators in Malaysia, okay, because you are all about consumer protection first and etc. Okay, but would they be open to get in a buy-in? Okay, because the reason why DeFi has taken off really, really quickly is because of its open, permissionless, censorship resistance, those feats, right?
Yeah.
But in your case, okay, it will require a lot of buy-in from the regulators, right?
Yeah.
Whether is it Malaysia or Philippines or Singapore, Thailand or Indonesia listening in right now, they will need that. My question to you is that um, how would you uh, yeah how would you go about that?
I know there is something like how to say is okay because of we DeFi is good. People like DeFi because it's very fast. No intermediary
Intermediaries, yeah.
involvement. Yeah, and to me, I think that although that sounds good, but that they are quite
Double-edged sword, yes.
yeah, double-edged sword. It is quite risky to the investor as well, lah. So that's why I think we better work with the regulatory to get this thing done lah, better that way lah, I think.
Okay.
Yeah.
All right. Well, it's interesting, okay, to hear from a different point of view, okay, of how to go about, building a decentralized finance product.
Yeah, because security commissions, Malaysia, definitely they you caught their attention, because they want to know like where this money comes from. I mean, from the lender, the lender may be using some money out from unknown sources, and then they can leverage on this platform, and then they do the money laundering. We can't really know that in DeFi. So we, as a company, we have to comply to these all those things when we do projects. I mean that's my.
All right,
yeah.
great. So we only have 5 minutes, okay,
Right.
to spend with one another. I think that one thing that I've asked all speakers is that now that you have shared with us, maybe can you share with us right now, what do you need? Okay, what is OMC Group looking for right now?
Okay, OMC Group right now, because we have the chain ready, we are looking for smart contract developers who are actually interested in building the apps. Feel free to engage us. We can maybe help each other. We have developers here in Malaysia, and then we have good relationship with Jason's and Harpreet, from Blocklime. And the reason also, I left out one reason why we actually fought Quorum, because there are we can say most of the DeFi or smart contracts projects are built on Solidity. And we want to create an environment that can easily let others to do migrations over to our chain. So without needing to do a lot of code change. So they can just reuse their existing Solidity smart contract source code and then just do a little bit of tweaking and then connecting to our RPC nodes and then do the deployment, and then they can straight away go live. Yeah, that's another reasons why we want to fork Quorum.
All right.
Yeah.
So I think that let's see whether any more questions from the group first. Okay. Have you ever thought about staking NFT in your game as collateral in your DeFi platform?
We haven't thought.
Haven't thought of that, right?
It's a good idea, yeah.
So I think right now there you have it. Okay, OMC Group, okay, is looking to build in DeFi. Right now they're in the exploration stage.
Yeah.
Okay, they are looking to gather feedback from the community, okay, of what you would like, okay, to see from a local regional player building a DeFi product in the space, what we would like to see. Okay, thank you so much, okay, for your suggestions. Okay, if there is a place that people want, okay, to be involved, okay, with and give their suggestions to you, where would be the best place, okay, to interact with you? Do you have a website, a Discord channel? What is the favorite communication vehicle for your?
For now, I would suggest you guys can go to Facebook and then search for OMC Group, and feel free to like our Facebook page and then leave comments or contact us through that channel. And then when we have any events like hackathon, maybe training, and then we will share those details in that page.
Any chance for an incentive program for the community? Okay, where because that's what a lot of the programs do.
Right.
As what's that they would have it on Discord and etc. etc.
Yeah, sure, definitely we will have that.
All right.
Yeah.
Okay, great. So with that, okay, I'd like to thank Sylvester, okay, for spending the afternoon with us. Um, just like to give a shout out, okay, before to some of our event partners, okay, who have made Southeast Asia DeFi Week possible. The first one being our friend from the Down Under, Australia. His name is Luke Jones. Okay, he runs a YouTube channel called Blocksiders. Blocksiders is a pretty cool Blocksiders is a pretty cool YouTube channel. He releases one video a week, usually talking about something trending, okay, in the DeFi space. He has covered many of the DEXs, compound governance tokens, DeFi farming, bonding curves. One thing I like about Blocksiders, okay, the content is that he's always straightforward. He always gives you as is. Sometimes, okay, he does not have a filter. It could be a good thing, not a good thing. So do check out his YouTube channel. It's really awesome. Next shout out, okay, goes to DeFi Singapore. If you're from Singapore, okay, and you're looking for a place to get DeFi information, this is a group where you can actually mingle and get information, okay, about the latest trends and yeah, just basically create a community out from Singapore. So join, okay, just go to Facebook, key in DeFi Singapore, and you will find their group right there. So we have a lot to cover. I'm really sorry, okay, that we couldn't bring Republic Protocol today. We would try to make it up to you, okay, by re-inviting them for a future event. But do be back, okay, 9 p.m. tonight, because we are going to be talking about Keep, okay, with Carolyn from the team. And then tomorrow we are going to talk about, I'm really excited for this one. We're going to have Synthetics, Curve, we're going to have Kane from Synthetics, Michael Igra from Curve, and Fernando from Balancer with us tomorrow on day 4. Do come, okay, for the one this evening, okay, because when you ask questions on that one, the daily giveaway, okay, will be $10 of Keep, okay, for the 10 best questions. With that, I look forward to see you at 9 p.m. tonight. Come back, see you back then. Bye for now.